I want to have a quick conversation with you about LLC to S Corporation transitioning. Let's say you have an LLC and you're trying to really figure out whether or not it will make sense for you to transition to an S Corporation. So let's talk about that. So what should you consider switching to from LLC to S Corporation in the first place? Well, for a couple of reasons: regulatory, tax, so fiscal reasons. It can be also something that has to do with the industry you're in. Maybe your industry sees more S corporations than LLCs. So what should you consider? First of all, self-employment tax savings. One of the biggest and most well-known advantages of an S corporation over an LLC is saving on self-employment tax. With an LLC, the income passes through to the owner, who has to pay 15.3% of self-employment tax, right? 15.3, remember that. If the owner resides abroad, the foreign earned income exclusion can minimize the income tax, but not self-employment tax. You always have to pay self-employment tax. With an S corporation, on the other hand, the owner can take a salary from the profits and apply the foreign earned income exclusion to minimize income tax. So whether you live abroad or you live in this country, you have to pay self-employment tax anyway. So the first advantage you might want to think about is the self-employment tax savings. Another one is the tax-preferred retirement savings. Let's talk about that. So, and this is based on our analysis. Another enormous advantage is that you can contribute more to retirement accounts, because with an S corporation, you can set up a solo 401k. Usually, only people with an income of less than $120,000 can contribute up to $5,500 to a Roth IRA/401k. With a solo 401k, however, you can contribute up to $18,000 to a Roth solo 401k as long as your salary is at least $18,000. You cannot contribute more than your salary. So in addition to the Roth contribution, you can contribute up to another 36 grand to a traditional solo 401k, again depending on the salary, to a total contribution of $54,000. So 18 plus 36. So with the defined benefit profit sharing plan, older entrepreneurs can limit their tax liability further and contribute even more. Okay, so this is one of those things where you have to think about this very, very thoroughly. Boss, welcome back to the show. It's really a pleasure to have you here. Make yourself comfortable. You are going to enjoy today's conversation. Let's quickly talk about the right time to convert your LLC to S corporation, because see, the thing is, you might be actually mulling over the idea of transitioning. But you got to think about timing too, because if you actually let's say if you transition, let's say in January versus June, for instance, based on your situation, things might not be as beneficial as you would want them to be. So from a tax perspective, it makes sense to convert an LLC into an S corporation when the self-employment tax exceeds the tax burden faced by the S corporation. In general, with around $40,000 net income, you should consider converting to S corporation. $40,000. So depending on your circumstances, the break-even point could even be as low as $25,000 net income. I'm talking about net income, not gross income. Of course, the details really depend on a variety of factors, including, first of all, the salary amount. Very important. So the owner of an S corporation can take a salary from the profits. What is considered a reasonable salary depends on the net income and industry. So it is very difficult to give you a target dollar figure. Now the IRS has this sort of reasonable compensation sort of factor or criterion to really think about. So the thing is that you may hear the general rules of thumb that salary can be 2/3 of net income. However, you want to take this with a grain of salt. The salary number is very subjective relative to industry standards and should be supportable. In other words, your LLC or your S corporation should be able to bear that extra cost that you are going to inflict upon the company. So that's the first thing. The foreign earned income exclusion. So let's talk about that. So if the owner qualifies for the foreign earned income exclusions, then he or she can exclude up to $107,600 of the salary from income tax. So probably be around $110,000 this year now. So that's the first thing. The state also. Some states tax at the S corporation level and the individual shareholder level. For example, if you have California and New York, New York also taxes the S corporation on behalf of the individual if the individual does not have New York residence. So if you are incorporated in one of those states, the tax savings for switching from LLC to S corporation really diminishes. It is generally still worthwhile to convert to save taxes as well as retirement savings options. Boss, I want to quickly remind you of today's topic. We're having a conversation about LLC to S corporation. When does it make sense? Let's talk about how to convert an LLC to an S corporation. See, the thing is that for federal tax purposes, you can simply make an election for the LLC to be taxed as an S corporation. So remember, when you actually incorporated, you chose to be incorporated at the state level as an LLC. So for you to actually do the switching, the switch from LLC to S corporation, things happen at the federal level, not at the state level. Now, some state levels, some states want you to file paperwork with them as well. But as long as you actually take care of things at the federal level, those things you can transition that status, that new status, from your federal papers to your state. Okay, all you need to do is fill out a form and send it to the IRS. So once the LLC is classified for federal tax purposes as a corporation, it can file Form 2553 to be taxed as an S corporation. It's important to know that you must convert to an S corporation by March 15th in order to be applicable for the following year, or within 75 days of opening the LLC to be applicable for the year of opening. Okay, if you miss this deadline, you may apply for late election relief if you have a valid reason for missing the deadline. I want you to keep in mind though that with this approach, you don't change the actual entity type, only the federal tax classification. Okay, so that's what I said. It's basically to change things, to change the corporate structure, you have to file paperwork at the state level. You have to change the tax classification, you actually just file paperwork at the federal level. So even though the IRS classifies the LLC as an S corporation, it is still an LLC and may be taxed as such by the state where it is formed. And one thing I also need to say here is that to change the actual entity structure, you have to formally change the LLC to a corporation with a formation state. And some states offer a formal conversion process, while others require a workaround. So the question is switching to an S corporation right for you? Let's have a conversation about that. Well, the thing is that it's one of those things, it depends upon your situation. It depends upon your circumstances. It depends upon your salary level. It depends upon how much revenue the LLC is actually generating. Because the whole thing is, if it's going to be, let's say, if it's not going to be beneficial to the company, then it's not really worth it. Okay, but if you have a question, let us know in the comment section, and one of our team members will get back to you. Now let's talk about LLC electing S corporation tax status. Now it's an option that a lot of people don't know about, and it's one of those things you got to really think about what can really help you. Okay, now let's first go back a little bit and explain why, what are the reasons for forming an LLC in the first place. First of all, when you think about LLC, I want you to think about two things, right? I want you to think about limited liability and flexibility. Limited liability and flexibility. And the thing is that when you think about it, an LLC is a business structure authorized by state statutes. That's what I said earlier when I said things happen at the state level. So every state in this country basically has similar legal lingo, if you will, legal language around LLC. It is a structure designed to provide the limited liability features of a corporation, along with the tax efficiencies and operational flexibility of a sole proprietorship or a general partnership. As a pass-through entity, unless the LLC chooses tax treatment as a regular or C corporation, all of LLC's profit and losses pass through to the LLC to its owners, right? That's pass-through taxation. And the thing here is that, as with a proprietorship or partnership, each individual member reports the profits and losses on his or her federal tax return. So we're talking here about Schedule C. So this avoids this actually work around avoids the double taxation to which a regular corporation, in other words, a C corporation and its owners, are subjected. Okay, so when we talk about the most significant features of LLC, so you have limited liability for owners, pass-through of income to owners, avoiding double taxation unless the C corporation tax treatment is elected. You have ease of operation, so fewer formal meetings and record-keeping requirements. You have a fewer profit sharing restrictions. Earnings are distributed as members see fit, not based on the percentage of capital contributions, although there are restrictions if S corporation taxation is chosen. You have the entire net earnings of an LLC passed through to owners in the form of self-employment income subject to 15.3% so self-employment tax. Okay, boss, I want to quickly remind you of today's topic. We are having a conversation about LLC to S corporation. When does it make sense to actually do the transition? When we talk about the transition, it really also makes sense to go back to LLC taxation because some people have it confused. And so when we talk about LLC, first of all, you need to understand you have the default tax classification of an LLC. So for tax purposes, by default, an LLC with one member, in other words, the one owner, is the disregarded entity. In other words, the IRS actually disregards the LLC as an entity. In other words, a single member LLC is treated as a sole proprietorship. By default, LLCs with more than one member are treated as partnerships and taxed under subchapter K of the Internal Revenue Code. In other words, you are going to file paperwork. You file your Form 1065 or 1120, 1120S, depending on the tax election that you have. But then you have to report income, the owner income, on Schedule K1, which then reported to Schedule C and then Form 1040. So you have LLC taxed as a corporation or LLC taxed as an S corporation. An LLC can elect to be treated as an association taxable as a corporation, in other words, C corporation, by filing Form 8832. 8832, remember that. So it's called Entity Classification Election. If so, the LLC will be taxed under subchapter C of the code. So that's for LLC taxed as a C corporation. And then you have a LLC taxed as an S corporation. So an LLC will need to, if an LLC wants to be taxed as an S corporation, that LLC will need to will actually need to elect to be taxed as a corporation by filing Form 8832 first. After that, an LLC can then file a Form 2553, election by a small business corporation, to elect tax treatment as an S corporation. So it's a little convoluted. I mean, it's a little longer to actually go from LLC to S corporation than it is to go from LLC to C corporation. But hey, listen, it is really worth it. This is all this whole conversation is about, to really explain to you why it might make sense for you to transition from LLC to S corporation. Let's quickly talk about how does taxation as an S corporation differ from taxation as a sole proprietorship or partnership, because before you do the transition, you got to have a clear idea what kind of benefits, what kind of rewards you can expect to reap, right? So sole proprietorships, partnerships, and S corporations are all pass-through entities for tax purposes. I want to repeat that. Sole proprietorships, partnerships, and S corporations are all pass-through entities for tax purposes. In other words, those companies and those entrepreneurs, they're not paying taxes at the personal level or at the business level. Income actually is being passed through to the owner, to the entrepreneur's ultimate or final tax return or individual tax return. Okay. Now, one thing I need to say here is that sole proprietorships, partnerships, and S corporations are not taxed the same. A main difference is that subchapter S of the code imposes a number of restrictions on the entities that can elect S corporation taxation. So let's talk about the general S corporation restrictions and requirements. First of all, the company must be formed in the United States. There cannot be more than 100 owners. Only individual U.S. residents can own interest. So that means U.S. citizens and green card holders. And there can only be one class of owners, no preferred shareholders or members. If you remember real quickly, if you have a C corporation, you can have different shareholder classes, right? You can have preferred shareholders, or you can have common shareholders. But for S corporation, you can only have one class. Okay, so the class here will be common shareholders. Subchapter K, which governs entities taxed as partnerships, contains no such restrictions. These restrictions take away some of the flexibility of an LLC and can make it harder to attract outside financing. This is why some people are more interested in having a C corporation as opposed to an S corporation or an LLC, because of the opportunity or the ability, if you will, to attract investments, be it domestic investments or foreign investments. Let me quickly talk to you about the advantages of S corporation election, because again, if you're trying to really transition from LLC to S corporation, you're trying to figure out whether it makes sense for you. It really will help you to understand the advantages of S corporation election. I mean, the thing here is that, I think, as I said before at the beginning of this show, employment taxes is an important element. Okay, so under the code, an owner of a business taxed as a partnership who is employed by the business is considered an owner. An owner of an entity taxed as an S corporation who works for the business is considered an employee. So right now, if you listen to me and you have an S corporation and you also work for the company, you're not an employee. You're not an owner. You are an employee for fiscal purposes. So with an entity taxed as an S corporation, only the wages paid to the owner or employees are earned income subject to a FICA tax for Social Security and Medicare. And this is kind of important because if you're an owner, you can actually allocate the rest of the income as paid distribution. That's fine, and those will not be subject to a SICA tax. Okay, provided that you materially participate in the business. In other words, you have to the income that you're getting from the business cannot be considered passive income. You got to be an employee. You got to work. You got to work 9 to 5 or 9 to 9 or 20, whatever it is. But you have to be active. So when we talk about material employee, you have to spend significant amount of time within the business. So the term material means significant in accounting or law. Material means significant. Okay, this is very important. So, and the thing here is that when we talk about combining the benefits of the LLC entity and S corporation tax treatment, basically you have several things to think about. From a legal standpoint, your enterprise will be an LLC instead of a corporation. Therefore, you'll have the benefit of ease of administration, so fewer formal meetings and record-keeping requirements. From a tax perspective, your enterprise will be treated as an S corporation. You'll still have the pass-through of income, avoiding double taxation, same as if your LLC was treated as a proprietorship or a partnership. The business can pay wages and salaries to you or to other owners, and this is kind of cool. And being treated as an S corporation may provide also opportunities for tax planning to minimize the overall tax liability of your business and for your business. Thank you so much for your attention. I really appreciate it. In today's conversation, I was quickly talking to you about the transition from LLC to S corporation. When does it make sense? So I give you a few scenarios that will really help you to really determine whether it makes sense for you to do this transition. Thank you so much for your attention. God bless you. I'll see you next time. Until then, remember, stay marvelous.